Hey guys, Q here from My Auntie Trading, and today I'm going to talk to you about the watch list that I put out on my Instagram just 2 days ago. All the alerts that I have, all those set out are the resistance points that I've found. I'm going to go over how I found those today. The way I got these stocks was through my screener on finviz.com. I'm not going to go too deep into the settings I did on Finviz, but these are how I got these stocks. I've recently been trading a little bit more penny stocks with the volatility of the market. I've been staying away from my normal options trading, but usually I would be doing options trading. So depending on how this video does, I'm going to be doing these every week. So stay tuned and subscribe to my channel because I will be putting out a watch list usually every Sunday night, and then Friday or Saturday the following week I'll put out a video explaining how the stocks did and how I came to find those stocks and why I chose those stocks in specific. So without further ado, I'm going to go ahead and get started. Keep these numbers in mind. I don't think I'll be pulling up this picture again, but I may be looking at it for my own personal, follow up with the numbers. So let's go ahead and get started. So I'm going to take a look at LCI first, okay? So let's go ahead and go into our Thinkorswim over here, and then I'm going to look up LCI. With LCI, it looks like I had set it at a $5.80 alert. So that was where I had it alert me that that the stock broke the resistance. So let's see why I chose that alert. I'm going to zoom out of the stock a little bit so we can see the 5-day performance. So I put out this watch list, let's say it was a Wednesday. Yeah, so it was a Wednesday, so that would have been the 19th. So this is when I put out the watch list. Looks like the stock went all the way up to 580 over here. I'm going to go ahead and zoom in. Let me change to my cursor. I'm going to zoom into this area right here, and I'm going to tell you why I put my alert at $5.80. So as you can see, the previous 3 days, the stock looked like it was starting to make its way up. If we zoom out a little bit further, I like to see a bigger picture. You can see that the stock had recently bottomed, and it's been on an upward trend since the end of last month. Or actually, I believe since just on the 15th and the 17th, that's right where it bottomed out. So when I zoomed in a little bit closer, I went into the 5-day. I saw where the stock had stopped and got rejected multiple times. The stock, as you can see on the 10-day, it had a resistance point. As you can see at the top of these candles right here, right around $5.80. That's where the stock hit, and it had these long extended wicks at the top of these candles, meaning there was more of a bearish output by the stock market. Therefore, it was followed by the bearish downward slope right where the moving averages cross, and the stock hit a double bottom, and then it made its way back up. And so when you zoom into the 5-day and you take a look at this, right where the stock struggled last time, if you zoom in right here, you can see that the stock struggled again at $5.80. But I still notice a lot of volume right around that area. And so with that being said, I automatically saw an opportunity for the stock to break resistance at $5.80. You can get a lot of shares for a little bit money, and so I had set my alert at $5.80 right around Wednesday. I'm sorry, and the stock tried to make its way to $5.80. This is the next day. This is Thursday. The stock tried its best to make its way to $5.80. However, it got rejected right at the top. You can see, if you know anything about candlestick charts, that the wicks were definitely extended. So long wicks at the top means that there was a bullish pressure from the bottom. However, bears took over and pushed the stock back down. So every time it tried to peak over $5.80, the bears kicked in and tried to push the stock back down. So the stock never made it above $5.80, as you can see on these candles. However, the stock did try to test it again the very next day. So the stock the very next day, today, tested that pressure again. So you can zoom in right around here. The stock consolidated, and there was a little bit more of a battle between the bulls and the bears. And then the stock, right as soon as it broke over $5.80, the volume kicked in. You don't want to go in too soon. You don't want to go in right at $5.80. You want to make sure there's a follow-up candle. Then you set your stop loss at $5.80 as well. So Technically, really, right around this area, you can start going into the trade as long as you set a proper stop loss. Me personally, I like to wait for confirmation, so I would have waited for the stock to actually break over $5.80, and then I'll put my stop loss at around $5.78, and then I'll wait for the stock to ride up until I notice some kind of slowing down, in which this happened. There was not a lot of bullish pressure to keep the stock going up. It reached a high of $5.91. You could have still captured some kind of profits doing this if you had went in at $5.80, exited at 91 cents. That's a 10-cent profit. If you had bought 100 shares, you'd make $10. And so that's actually not a bad profit right there. Remember, capturing small profits along the way is the way you want to do it. And so the stock didn't have enough bullish pressure. You can see there was an engulfing bearish candle. This is called an engulfing because it engulfed the previous candle. And so right away you could see that the stock started to slow down. It hit a double top. It tried to go over this, and then it went back down to close at $5.79, right where our resistance point would be now. So remember, our resistance point was $5.80. As soon as the stock broke over it, then it became a support point for that stock. So now we can safely say that there's a support at $5.80, and the next resistance is going to be at $5.91. I don't know if I'm going to necessarily keep the stock on my portfolio for the next week, but I'll definitely keep watching it to see if there's another opportunity. But the next resistance here would be $5.91 because this is where the stock got rejected twice, so you want to see that breakthrough again. So as long as the stock keeps its bullish momentum, you can keep it on your watch list and see if it breaks over the very next high. So let's move over to the next stock, and that's going to be VUZI. I remember this one had a running start yesterday, but I think it dropped significantly today. So I had called out this stock also on Wednesday on the same watch list. For VUZI, my alert was set at $4.35. So why did I come up with that $4.35? I honestly don't remember, so let's go ahead and figure that out. So I'm going to zoom into the day that I actually called it out. Okay, this was a Wednesday. The stock that day, let's see how it performed. That day, the stock looks like I had set my alert right at the end of day, right at $4.35. So I was expecting a breakout in the stock considering the momentum that it had. Okay, that's what it was. So as you can see at the end of the day on Wednesday, right when I called out the stock had plenty of bullish momentum. That's a huge bullish volume right over here. And it's very much a good sign that the stock is going to keep going up. So the way I kind of told, not knowing where my support and resistance are yet, the way I chose the stock was because the stock had crossed over those two significant moving averages. These are the 10 and 20-day moving average that I'm using right over here, and they act as a support and a resistance for a stock, just as do normal horizontal lines. So as the moving average as the stock crossed over the moving average, it was very much a good sign, especially with all that bullish pressure. And so I had set my alert at $4.35. It looks like by end of day Wednesday, it actually had popped already over $4.35. And so when you zoom out and you look at the very next day, let's see what happened. So if I had set my alert at $4.35, then I would have went into the stock and then set my stop loss at $4.35 right after it crossed. The reason why is because then the point of resistance, which was $4.35, automatically became a support level for the stock. And so as soon as the stock crossed over that support, now we make that our stop loss, and then we wait for the stock to ride up. Stock actually made it all the way up to $4.88. So that's actually a 50-cent increase. If you had bought 100 shares, you'd make $50. So that's a great profits right over there. And then the stock slowed down. The way you can tell that the stock slowed down is because of these three bearish candles. So as soon as you see back-to-back bearish candles, more of a bearish pressure, considering this top line wick over here, these I would have gone out of the stock as soon as the stock dipped under that moving average. So as I told you before, moving averages act as support and resistance for stocks. And so the stock here dropped under that moving average, and then it became a resistance line. And it looks like there was not enough bullish pressure to take it over the moving average again significantly. Therefore, the stock kept falling down for the end of the day. However, towards the end of the day, the stock gained its momentum, made its way back up to $4.95. Let's see what happened today. This is the day that I haven't taken a look at today, which is Friday, the last day of the trading markets. The stock tried to make its way back up to all the way up to 498. However, you don't want to trade at the beginning of the day because you still don't know the momentum that the stock has. So it's very dangerous to trade within the first couple minutes if you're an inexperienced trader. So at this very point, I would have wanted the stock to prove itself to me. I would have wanted it to break over this highest point of the day, which was right at the beginning of the day. The highest point was $4.99. So if I wanted to trade this stock again, I would have wanted the stock to break over that $5 period, in which it looks like it only made it to $5, got rejected 3 times, and then got pushed back down. The way you can tell that the stock is now in a bearish manner for the day is because it crossed under that moving average. Once again, I told you, as you can see, the stock keeps struggling to make it over that 10-day moving average, but it keeps getting rejected until finally it breaks over. It tries to make it over again. However, it's consolidating at this point. There's really no telling what the stock's going to do next. However, I do see it going in a bullish manner. So if I was going to trade this stock again, I would definitely set an alert at $5. Wait for the stock to go a few cents over $5. Buy the stock, set my stop loss at $5, and write it up. If it drops under that 5, you know to exit. And then make sure to take your profits, guys. Don't wait for it to drop under 5 for you to exit. Make sure that you take your profits at a higher point. Small losses are better than no losses. So I'm sorry, small wins are better than no wins. So make sure you take your wins. A lot of traders think that they need to keep riding the stock no matter what. No, I mean, trade it for the day, take your profits. Even if the stock dips back again, then look for another trading opportunity. You want to act like a wolf. You want to wait for that time to strike quick, first in, first out. You made your profits and you walked away happy. Next one is APPS. So my alert was at 485 and it looks like it didn't hit all 3 days. So let me tell you why I set my alert at 485. I wrote this down for you guys. So here we go. So my alert is 485. The reason why is because it's very obvious. So let me zoom out a little bit further. Let me see if I had anything else set. So the stock had recently came up off of a bearish move. So as you can see, the stock was dramatically dropping and all of a sudden they popped. So the stock had popped and it looks like it has hit a double top. That's why I chose that $4.85 mark. As you can see, I have it marked. The alert never went off. Is because the stock clearly had a strong pop, but it's waiting for its next direction. So the bulls and the bears don't know where to take it yet. From the looks of it, it looks like the stock is still going to go up. It's just coiling a little bit longer. It's taking a little bit longer to break over that $4.85. The reason why I set it at 485, not 495 or 496, was because these didn't look like very achievable goals. This looks like an achievable goal because the stock had resisted at it 1 and then 2 times. So as soon as the stock breaks over this $4.85, which it probably will, I'm gonna have it on my stock loss. On my stock watch list for the next week because I'm very curious to know what the stock is going to do. So as soon as the stock breaks over this $4.85 mark, then I'll have my stop loss stopping at $4.85, and then I'll wait for the next candle to tell me where to exit the stock. But very interesting pattern that I'm seeing here. I do see the stock going up a little bit further. Let's see what happened within the day. Oh yeah, very nice. So the stock actually looks like it had a very strong bullish move by the end of the day. Friday, so we'll probably see the stock break over 485 next week sometime. So we'll keep a lookout on the stock for next week. Now let's see, ZYXI. I don't even know what these companies are. I just like to go based on the charts. So let me zoom out of this one a little bit to take a look at the 5-day, 5-minute. So I alerted this stock at $10.84. So $10.84 is where I set my alert on Friday. Let's see why I did that. It's because it was the highest point. Okay, so on Friday, considering there was no high point recently within the previous 4 days, you can't really tell where the resistance point is. So you don't really have a confirmation on resistance. So what we focus on is the highest point of the day on the most recent times. Now, if we had zoomed out and these past 5 days look like they have another high point right around this area where my cursor is, then obviously that would be the primary resistance point. But it looks like the stock had made it over its prior resistance that was done on Tuesday, and then when I found the stock on late Wednesday, which was around this time, I had to zoom out obviously and see the most recent resistance point, which happened to be on the beginning of the day on Wednesday, which was this candle right over here closing at $10.84. This is where I set my alert. And so really the next thing we wanted to look for the next day was this area right at the beginning of the day. We wanted to see what kind of start the stock would have. So obviously there was a lot of volume on the stock. The stock had some kind of bullish pressure because you could see this red candlestick was actually above the moving averages from the previous day. So the stock on the previous day had a candle that closed above the 10-day moving average, and then the stock opens above both moving averages and never makes it below. So that's a pretty promising sign. So we wait for the next candles to tell us what to do. Obviously the stock had more bullish pressure, as you can see by these wicks on the bottom. Candlestick charts, are your best friends. So I hope you know what I'm talking about when I say wicks. I think I have a video that explains them. If I don't, hit me up about my course. I can teach you all about candlestick charts. But as soon as these wicks on the bottom started being confirmation that the stock is actually on an upward rise, we wanted for it to break over that $10.84 mark. You see how the stock consolidated right around this area? It looked like it moved a little sideways. That's your cue, guys. That's the fact that the stock is trying to break over. The bulls and the bears are fighting. So here this tells us that the stock made it over. Obviously, it made it over that mark, and then stock kept rising, and it kept using that moving average as a support. Remember, moving averages are a lagging support, so obviously it's drawn after the fact, but as long as the stock stays above it, then that's a good sign. Now as soon as the stock started to hit this top after this big candle, looks like there was a reversal candle. This candle or doji star was, both parties, they didn't know what to do. The bulls and the bears were lost if they wanted to go up or go down. Therefore, they slowed down significantly, and the stock fell below that moving average, and it kept moving down, tried to make its way back up. So it's very important right after this area right over here, guys. Let me go ahead and zoom in. Right after this area, now you have a new resistance. Now you know that your resistance is at $11.25. So it's very clear to you that that's going to be the next point in which you want to watch the stock to break over. So that would be the resistance in which you set your alerts at. And then after it breaks that resistance, you want to set a stop loss at that resistance or just below. That way you can give your stock some breathing room. So then the next day, which was today, the stock tried to follow through and break over that $11.24 mark. However, it got rejected again. You see that long wick at the top? That's the bulls trying to take the stock all the way up here, which was the highest point for that candle. However, it got rejected by the bears, which was a promising sign. I would have kept watching the stock for the rest of the day just because I'm interested in seeing what it's going to do next. But still, it has a lot of bullish momentum, guys. So this stock is definitely still brewing some kind of move. If it doesn't make its bullish move, then it will have a very strong bearish move. But everything looks pretty promising. I wrote another note for you guys. Let me just take a look at it real quick. Oh, it's a bearish divergence. So there was a bearish divergence in the stock, and I want to know where I saw that. That way I can teach you guys a little bit about it, because bearish divergence are, some of the most, they're one of the strongest ways that you can tell that a reversal is coming. I remember seeing it somewhere. Let me zoom into the 1 day 1 minute and take a look at yesterday. All right, so let me point it out for you. So anytime you're looking at a stock and you see its RSI, which is the bottom right over here, you would want to look for a bearish divergence, because a bearish divergence can tell you that a reversal is coming. So when you look at the RSI, and you can see obviously at this point, the RSI is way over 70. It's actually reaching about 80 at that point, and so you already know the stock is overbought, and so the stock is still going up, and however the divergence is starting to fall, although the stock is going up. Absolutely not a good sign. It very much means that a reversal is coming. And then the proof of the reversal came right at the top when the divergence was lower, significantly lower than the previous high. So although the stock made a new high on the chart, on the RSI, it actually went lower. So that right there is a dead giveaway that a reversal is possibly coming. And then you got your confirmation right as soon as that stock dropped below those moving averages. As you can see, this RSI is reaching higher. Also, although the stock is higher at this point, the RSI is lower. So Obviously, right here, you've gotten a reversal. So you do want to get out of the stock at 11.25 and cover profits. Don't wait for that stop loss because then you would lose all the profits that you made. So I would have entered the stock right around 10.85, right around the consolidation period in which I had set my alert at. And then I would have rode it until it moved under the moving average, and I would have exited with my profits. So I'm going to move myself back here. And then the next stock on my watch list will be OII. So let's see if that one did anything. I don't think it did. I think it actually fell. So it might have been just a major bad call. So I had my alert set at $20. So let me go ahead and move out to the 5-day period. And it looks like when I had called it, it was the end of day on Wednesday. So let me see why I chose $20. There's probably a specific reason. I'm going to zoom out even further. Because it's probably an old resistance that's been there for longer than 180 days. So let me see why I had said that, because I remember the stock was coming off of a huge reversal. So yes, okay, so as we can zoom in right over here, you can see that back in that looks like May 1st, the stock had reached all the way up to $20 but got rejected, and it was forming some kind of cup and handle pattern. That's what we were hoping for here. And so we had set another alert at $20 for the stock to break over, because that was the highest point that it reached on May 1st. And so that was 100 on the 180-day stretch on 4 hours. So now we're going to zoom into the 5-day, 5-minute, in which I had the stock set at that alert at the end of the day on Wednesday. And so I had set my alert at $20 because of that previous May 1st experience that I showed you earlier. The stock had on end of day on Wednesday, it broke over that moving average, which was a promising sign towards the end of the day, especially all these bullish candles. And we were waiting for it to break over $20, breaking out of that cup and handle pattern. If you don't know what a cup and handle pattern looks like, let me actually draw that out for you. I'm gonna pull up my drawing tool here. I don't like using these. I'm gonna use my recording tool. So this was the moving cup and handle pattern. So this would be considering the cup. You can see it coming down, and then what we would hope for here is for the stock to dip under and then break above. So here, this is where the stock would break that $20 resistance point in which we had pointed out earlier. So anyways, I'm not going to go into this one too much. It doesn't look like the stock broke over, but it's still brewing some kind of move. So you may want to put it at that $20 mark and see if the stock breaks over if you do want to trade the stock. Now remember guys, trade at your own risk. I don't want to be the one to give you advice to trade poorly or positively, but I do try to give you the best advice that I can based on my own experiences. So if you have enjoyed this video, please subscribe to the channel. My name is Q, aka the Chartist, and I will be putting these videos out hopefully every week. I'll try every 2 weeks for sure, but every week I can't promise. Anyways guys, if you do want to see our watch list, go ahead and visit our website and leave your email on our website, or follow us on Instagram where we post it every week. Thank you.